Hi, welcome to Carnegie and our interview with Ependion. My name is Markus Almerud. I'm an analyst here at the bank. I got with me Joakim Laurén, who is CFO at Ependion. Hi, Joakim.
Hey, Markus, good to see you.
Yeah, thanks for coming and talking to us. You released Q4 earnings late last week,
Yes,
and it was a good report. Uh, Maybe we start with demand and a broader question. Order intake was better than you had expected. If you can talk a little bit about the markets and if there was any clear trend within the quarter.
yes. Yeah, the fourth quarter marked a shift compared to the hesitant pattern that we've seen previously in 2024. Both in Westermo and in Beijer Electronics, we saw improvements in the order bookings. And that is, of course, nice to see. Also, when we dig somewhat deeper, we note that in all the focus segments, we do see improvements within the both business entities. So that is of course, a good thing to see. We should be aware that the demand in the previous quarters in 2024 has been on a quite low level. It's good to see an uptick, but it's too early now to talk about a trend shift. There's too much uncertainty in the world to state that. But of course, it's good with a positive ending of the year.
But if we stop a little bit and just talk about because you mentioned the hesitant pattern that we have seen early in the year, and
Yeah.
that kind of disappears a little bit. If we try, is it any end user segment that stick out, or is it a broad kind of recovery, for a lack of a better word?
In general, it's quite broad, but we can talk about some of the segments. Clearly, in the train side, we see an improvement, quite significant improvement. Order bookings in Q4 for the train segment were doubled compared to what we saw in Q3. But also, if we compare to previous quarter, the whole year of 2024, it was on a higher level. So there we can see a clear improvement. Also within the energy segment in Westermo, we also see a good ending of 2024. Within Beijer Electronics, the marine segment has continued showed a growth, and here also we see a good ending of 2024. So overall, quite broad, but those three segments is worth mentioning, I think.
Mm-hmm. And that leads us into the segments and the business units, and starting with Westermo, maybe staying with the train as it's such a big segment and important for Westermo. It's been quite low in the early part of the year. Would you say that there is this doubling that you're talking about in terms of order from the train? Is it kind of a normalized level? Is it a pent-up demand which is driving it higher than it should be in normal circumstances, etc.?
Clearly, we see a step up compared to Q3 on the train side. Q3 was quite low. So I would say we are more back to normal when it comes to the train side. We have for certain seen some kind of destocking during 2024, but now I guess now we see that the demand is picking up. Clearly, our position within the train segment is continued strong, and our customers in the train side, they have a big backlog, and when they start to deliver, of course, they need products from us in Westermo. So now it's good to see how the train side is picking up by the end of the year.
But would you say, just staying with that question a little bit, would you say we're in a situation where we are at normal levels or a bit above normal levels?
Yeah, it is better than we have seen during 2024, and it's more back to normal. We are not on the levels where we had in 2023, for instance, but improving, and compared to what we've seen previously in this year, more normal level in the train side.
But you would also not say that you have customers who didn't buy in Q3 and then all of a sudden they come and buy in Q4 and then they will not buy in Q1. But it's kind of you would say this is a stable, normalized level where you should be right now.
Where we should be right now. It's more normalized in the train side, that's for sure.
And moving on, talking about the margin. So the margin it reached an all-time high.
Yes.
So quite impressive, especially given that we didn't see big volume growth year on year, but still the margin was quite high. Were there any one-offs or was any mix impacting the margin?
In general, there's no one-offs, particularly in the quarter. We have talked about that there's a potential to improve the way we're operating our supply chains. We have been working with that during the year, and that is now kind of paying off. We see good efficiency in our supply chains. We have seen also lowering on material costs, both market-driven, but also driven by our own activities of redesigns and change of suppliers. That in combination is giving then the good gross margin development.
And that should also mean, if I read you right, that because there are no one-offs, there's no real mix driving this, but rather operational improvement, it should also be sustainable.
The gross margin development that we've seen, we believe that that is sustainable. Then, of course, we should remember that within a quarter, depending on how the delivery mix looks like, it can shift. But there's no one-offs in this, so we believe that gross margin improvement that we've seen are sustainable.
And should we expect some volume effects here as well? So once volume come back, that there's a leverage effect as well?
We do have a good leverage opportunity within our business segments with gross margin well above the 50% mark in both Beijer Electronics and Westermo. And with additional volume, that will contribute well to the profitability. So margin is you can expect margin improvement with growth. Yes, that you can.
If we move on a little bit to Beijer Electronics, the other business segment and unit, here you also saw orders recovering, not to the same extent as in Westermo, but still a recovery. What would you say about the demand for its products and what end markets stick out here? We were talking a little bit about manufacturing.
Yeah. If we talk about where we see good growth, I mentioned earlier marine side. Here we continue to see good growth in Beijer Electronics, driven by the sustainability shifts within the marine industry and where we are well positioned in many of the suppliers that delivers to that market. Manufacturing has been quite stable during 2024, but on a relatively low level. We saw a somewhat higher activity or higher demand in Q4, also in manufacturing. That was also nice to see.
And if we stay just with the manufacturing side, and now drilling a little bit, but still, is it the digitalization which is driving this? Is it normal production which is coming back? Is it possible to say?
I would say it's quite broad. Is it driven by digitalization or a general demand? Somewhat higher demand in general. That is what we can note in the manufacturing side. And if we talk about geographical regions, the Asian market is quite still dull, but in Europe and North America, we saw improvement in Q4.
Okay. And looking at the margin, so the margin has been quite volatile between the quarters. And this quarter you refer to mix, and also last quarter you refer to mix. And we know that you are phasing out low margin products, display solutions, and other low margin products. If you look beyond these and you look at the, call it core business that is excluding these, what's the margin profile like?
Yeah. If you take the base business or the main business or the focus areas within Beijer Electronics now going forward, the profitability is quite stable. The gross margins are on good levels, but what we have seen historically with shifts in profitability in Beijer Electronics is very much driven by the low margin products and the volumes of deliveries that we've had within the quarters. So the base business or the focus business that we have in our strategy now, there we see a much higher and more stable profitability.
Mm-hmm. And display solutions, that phase out is done, right? There's nothing left, more or
Yeah.
less.
Yeah, I mean, we have stated the display solution Asia, that is phased out completely. Now, when we are informing about the other non-focused products that we are phasing out, there is an element of display solutions not in Asia also in that. But that is now being phased out. There will be a small portion sliding into 2025. We have guided around 20 million, and that will be mainly in the first quarter in 2025.
And I'm curious, did you see an acceleration of this phase out towards the end of 2024?
Yeah, if you look at Q4 compared to Q3, I would say in Q4 we had a higher portion of these phase-out products, which was then driving down the profitability, while in Q3 it was actually the opposite. It was less of that. And so you had a positive mix, you could say, in Q3 and a somewhat negative mix in Q4.
And you have also, during the quarter, you launched the new product family, the X3. How is that progressing?
Yeah.
And if any, have you gotten any feedback so far?
Yeah. Yes, you're right. We have been working quite a long time now with the new generation of HMIs. We call them X3. We have displayed those in various occasions during the second half of 2024, different trade shows, etc., displayed to customers. And there's a huge interest, a positive view on the new assortment that we are putting forward.
Mm-hmm. Given that you have displayed these and you have shown them on trade fairs for the past year or so, is it your feeling that you've had customers who kind of delayed purchases, waiting for the new launch, and that you have some pent-up demand, or is it impossible to say?
I wouldn't express it like there will be, a big shift from one quarter to another. We should remember how the business works. Many of the customers, they design in our HMIs in their products. What we will see in 2025 is that some customers will remain with X2 until they redesign their equipment and then design in the X3. For sure, there have been customers not speccing in the X2 because they want to have the latest version, the nicest feature, etc., that the new assortment is coming with. And we will see more of that in 2025. We are certain about that. But it will be a gradual shift where X2 will be phased out and X3 will gradually improve. But the overall ambition with the new X3 is, of course, that it will drive growth.
So acceleration of growth from where we are standing right now is this kind of your expectations?
Yes.
And then finally, maybe on everybody's tongue these days is the tariffs, which has been delayed, but still initially imposed from the U.S. government. How, if any, are you affected by this? And then I mean, it's always difficult to talk about like second level, but in terms of first level impact.
Right now, what's been communicated, we are not impacted. We do not manufacture in China nor in Mexico or Canada. We do manufacture in the EU when it comes to Westermo and in Taiwan when it comes to Beijer Electronics. It's still too early to say what will happen and what will actually be imposed. But we are preparing ourselves to make sure that we can act depending on what will happen going forward.
But no direct impact as of
No
today.
direct impact as of today, no.
Right, Joakim, that was all from me. So thank you very much for coming here to talk to us.
Thank you very much, Markus.
Speak to you soon.
Speak to you soon.